world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello, ladies and gentlemen, and welcome to Rebank. I'm your host, Will Beeson. We've got a special episode today with Brett King, author, acclaimed international speaker, and host of Breaking Banks. We caught up with Brett in London this week following the Innovate Finance Global Summit, one of the premier fintech events worldwide, certainly one of the best in London, put on by the phenomenal Innovate Finance, one of the leaders in promoting London as a fintech capital. It was great to catch up with Brett. Let's dive right in. So we're sitting down with Brett King in London. Brett's over for exactly. Brett's over for the Innovate Finance Global Summit that was held here in London yesterday with some events today as well. And Brett, firstly, welcome to Rebank.
Welcome back.
Welcome back to Rebank. Good to have you again.
Thanks, Will.
Yeah. First time recording in person.
Yeah, absolutely. It's great.
Yeah. So yesterday you did a fireside chat at the Innovate Finance
Without the fire.
Summit without the fire. And you also moderated a panel. And the fireside chat was on quantum computing. The panel was on AI. I thought it might be interesting to kind of recap both of those for the audience and also get your views, your thoughts coming out of that. I thought both panels were extremely interesting. The first, quantum computing, I think when you talk about any really futuristic space age technology and you've got someone as knowledgeable and experienced as Ilyas Khan, the head of Cambridge Quantum Computing, who is just and
mates for Stephen Hawking. I mean,
there you go. I think the highlight for me certainly of that chat was when it's right. He referred to Stephen, right? So when you're on a first name basis with Stephen Hawking, you're clearly
one of the smartest
right.
guys on the planet. Yeah.
Yes, I mean, I'd be interested in your reflections on that presentation specifically. Basically, Ilyas kind of outlined where quantum computing is, his view that quantum computing will impact the current business cycle, not the next business cycle, not 2 business cycles from now, but we are already starting to feel the effects of quantum computing. He had some very interesting quotes for those of us in banking and financial services, saying that
you got to be quantum proofed or quantum ready.
Yeah. Quantum ready. Certainly in terms of cybersecurity, password protection, the ability to safely store digital assets for customers. But I think he also said no area of banking is immune from the impact of quantum computing.
Correct.
I think that's of fundamental relevance to everyone in this industry and things that something that people need to be keeping in mind. General thoughts on Ilyas's presentation and quantum computing more broadly.
Well, for a guy that is heavily invested in tech, and this is the sort of stuff that I read up on in my spare time, and so I was just totally geeking out and having an amazing time. Clearly, when I caught up with Ilyas after, I said he got the right mix between sort of the magic and the pragmatic, tactical approach to this. Clearly, this was probably for many in the audience the first time they've even thought about how quantum computing sort of affect banking. So I think that was an important discussion to have, particularly around privacy and security and cybersecurity, because the ability for us to use quantum, to produce strong encryption is incredible. That's a huge opportunity. What we thought would happen when AI came along and with quantum computing is we thought that this would give us the ability to crack any system. And it turns out actually probably the opposite is true, that people that deploy quantum and AI will have extremely secure systems. Those that don't will be really vulnerable. So in the short term, there's your strategy.
I think you made the point that a 2,000 bit number currently takes something like 1 billion years to arrive at the prime factors, 1 billion years. And with a quantum computer, literally a matter of seconds. Yeah. So talk about changing.
I know. I mean, this is, it's we have to think really differently about how we're going to use this computing technology. The one thing I found interesting was he was talking very much, this is where academia has a role to play, is the modeling in terms of how we program quantum computers to solve these big problems that we have. Climate change, geoengineering, mining asteroids, colonizing Mars, curing cancer. The big questions, the polynomials, and all that we can't solve currently easily. All this stuff that he talked about, it does require a different programming paradigm. It does require a different way of thinking about asking the computer to solve that problem. And academia has been already thinking about this for quite a while. So if we're looking at where we're going to get quantum computer programmers, right, they're probably largely going to come out of academia. Having said that, the numbers he talked about, the biggest budgets in Google, in Tencent, in Microsoft are going into quantum computing technologies. I mean, that as a disclosure in itself, I mean, how many banks would say their biggest budget in technology is going into quantum computing? None. And yet for the big tech players, well, there's only one that was mentioned there, right? Tencent and Alibaba, those two. Now, you can call them a bank, but in China, they are definitely competing side by side with the banks. So what does Alibaba or Alipay and Financial and Tencent know that Chase, HSBC, Deutsche Bank, Wells, Combank don't know? They know quantum computing is going to be a hell of a differentiator.
Yeah, I mean, that distinction between what's happening now and what will happen in academia going forward, and what kind of parts of quantum development need to be happening in large organizations. Clearly, budget is a huge issue. Academia I suppose, generally benefits from not needing to immediately drive revenue or profitability from the investment, the research work that they're doing. But it sounds like the most cutting edge hardware and software development in these very early days is coming out of academia. But for it to really reach scale, you need teams of thousands of engineers who are actually not only implementing it in commercial use cases, but building applications on top of it. And I think one of the points Elias made was that he was actually hesitant to talk about what quantum computing really means in a day-to-day consumer life perspective 5-10 years from now. Because
although he did say when you're sitting down at Christmas dinner in 2018 that you will be using quantum computing somewhere in your life. Now, it doesn't necessarily mean you'll log on to an app that has direct access to a quantum computer. What it does mean is that you may be using a banking app, and that bank is using a quantum computer in the cloud to do cybersecurity, for example, making your transaction secure. And so it'll be infused into our life. But I think, will we see that? Not necessarily. It won't be discernible, but we will start to hear more and more about some of the big achievements that quantum computers have achieved that were not possible in the pure silicon age.
Mm-hmm. No, and if 100 companies, I think was his estimate, by Christmas 2018 are going to be using quantum computing for real world uses, and that in 5 years that it becomes thousands of companies around the world, it will be absolutely fascinating to see what sorts of implementations those are actually supporting, because I think he was talking about some very obvious uses, solving equations, cryptography, but was hesitant to even hypothesize what, once commercial organizations have this technology in their hands and 5 years of R&D budget to build around it, what sorts of applications could come about.
Well, he did say in his defense that every time he's made a prediction about this stuff in the past, he's been wrong or he's been criticized. So he was careful to stay away from that. Now, I guess that's comes from the experience of learning where your strengths are. But he's a very articulate, thought leader in this space, and I really enjoyed the opportunity to speak with him.
And the second session that you were involved in yesterday was a panel on AI with some interesting individuals from the likes of Infosys, Intel, Barclays, and Thought Machine, which is a London-based core banking system startup.
Stellar panel.
Absolutely. So Mike Blaylock runs financial services for Intel, Michael Hart, head of group innovation at Barclays, Paul Taylor, former Google engineer, now founder and CEO of Thought Machine, and there was a representative from Infosys on the panel as well. I thought Paul had made a really interesting point early on, which kind of provided important context for the panel specific to banking and financial services. So if you're thinking about AI and what banks can be doing with AI, certainly things like credit scoring and fraud detection were early use cases. I think a lot of organizations are leveraging those technologies for those two things already. Paul's point was to really get the most out of AI, to really leverage its power, you need a real-time core with centralized, accessible data in order to then layer AI on top of it. And the company that he originally founded was aimed at
machine learning
and helping banks leverage AI, deploy AI. What he found was that banks actually weren't ready because the core architectures were so antiquated that they couldn't quickly and efficiently deliver the data to be processed by the artificial intelligence layers to actually start doing interesting things. So he pivoted and is now running a next generation core banking platform development company.
So if you think about the problem, right? If you're going to use AI to anticipate customer behavior, as an example, or do predictive analysis, use machine learning to learn how you do your payments on a day-to-day basis. So I can anticipate when you're likely to need credit when you walk into a grocery store and you haven't had your salary hit the account, and I'm going to provide you with a contextual credit opportunity as an example, right? Then the data required to make that decision is spread across multiple different disparate systems in a bank. And some of the data you don't have. So this is if you like, a data design problem for enabling AI to learn. AIs need a lot of data to do this machine learning properly. And, the strength of AI is its ability to just synthesize that data. When you look at the likes of IBM Watson, how it is able to outperform the most experienced oncologists in terms of cancer diagnosis, essentially what it's doing is it's sucking in 25 years of cancer research and medical papers and diagnosis data, crunching all of that and absorbing it and synthesizing it and coming up with a solution. But access to that data is absolutely critical. The same in banking. If AIs are going to transform the way you perceive your bank on a day-to-day basis, the way the bank fits in your life, then it's about AIs getting access to that data. And the core systems we have today, the way data is organized, is not built for that outcome. And so, as Paul was explaining, as they were trying to do machine learning on existing systems, they would find that some of the problems they were trying to crack required data across disparate systems, and it was just too hard to try and build those bridges on the existing core systems. It's just frankly easy to replace the core.
Michael Hart, the head of group innovation at Barclays, gave us a refreshingly candid view, I thought, when you asked him to name the leading banks in the AI space, and his answer was none. If you look across industries, the leaders are clearly the likes of Google and Facebook, and there are no banks, in his view, in that category. How does that fit with conversations you've had with banks in the past and your experience around AI?
I mean, banks have had that come to Jesus moment the last 12, 18 months on AI, and everyone's trying to invest in this. But, we were talking backstage, Michael and I, and, we were talking about Amazon's efforts in this area. And Amazon went to market to try and hire 1,000 data scientists over the last couple of years for the purpose of building out their AI capability. And they were prepared to pay whatever it took. And they got 400 of them after all of that. There's a ton of competition in this space. Now, if you're a bank and you want to do AI and you've got to recruit a team of 100 data scientists, if you're HSBC or JP Morgan Chase or B of A, then the chances of you being able to attract that talent versus Google DeepMind or Microsoft or Amazon, it just infinitesimally small almost. So ultimately, you're going to have to probably use someone else's AI capability. You might have a small core team that knows how to integrate into the bank, but this is the challenge. And also the fact that banks started late. And so I think this is appreciation of this is that even though you've got the likes of the CEO of BBVA and the CEO of Cap One and others saying we have to become and Piyush from DBS, the CEO there, saying we have to become a technology company. A bank will never be as good a technology company as Google or Microsoft or Amazon, who have been built up from the ground up as a technology company. They will be able to be technology-like, right? Or technology first over bank first. But they're always, I think, going to have to be secondary in terms of these breakout technology capabilities to the guys who are purely involved in it.
Yeah, and I would imagine most banks would say that works for us because we're in the business of banking, and those guys are in the business of building software. The question, I guess, looking ahead, especially I think in retail banking or segments of banking where customer touch is unnecessary, where self-service is the model. What is the business of banking? Mm-hmm. If it's moving digital information around,
now you're starting to get it, right?
Then I think you're a software company.
Yeah, and so this is really the key challenge: is do banks make good banks in the future? And the answer is no, because the skills you need to be a good bank in the future is not expertise in banking. It's expertise in technology, which is why, as we were discussing yesterday, I'm working on my new book, Bank 4.0, right now. And I've approached this as a design exercise, saying, if you were to start from scratch today, building the financial services system, if you didn't have banks and charters and payments networks and all of this sort of stuff, if you started from scratch building a new financial system or banking system today, would it look anything like the banking system we have today? And the answer is no. So when you take a first principles design approach to banking, so the way Elon Musk has approached SpaceX design, or the way Steve Jobs designed the iPhone, combining the iPod, a web browser, app capability, and the phone into a new, touchscreen device. If you take that first principles approach, then ultimately what you recognize is that the bank of the future looks a lot more like Ant Financial or WeChat or M-Pesa than it does Chase or Wells or HSBC. And largely that's because they've started from scratch. They don't have legacy behavior they have to overcome, legacy systems they have to overcome. And they're just building experiences where banking is embedded in people's lives rather than trying to transform core systems with products and then retrofit them for these new channels or new capabilities. So ultimately, technology, software, experienced companies are going to be really much better at banking than banks.
So Movin, the company that you started and run, is a technology company, is a software company. What experience have you guys had with AI? Is that something that you guys have integrated into the platform already? Is it something you're looking at in the future?
Sure. So December 2015, we deployed Amazon Alexa in beta. So we have had early capability of that. Just simple things like you could ask Alexa what your balance was and, what the last few transactions were, those sorts of questions. And now that we've built our savings capability, we've underpinned moving on a couple of sort of predictive and behavioral algorithms. One is a spending insights capability we have, which looks for anomalous spending events. Because we believe that if you're trying to help someone understand how to save money and how to manage their finances, one of the most helpful things you can do is say, this is where you had a spending spike that's really blown out your spending this month. And if you can identify that behavior consistently and change that, then over time you'll be able to save more. So that's one piece of AI that we've had deployed now for, 2.5 years. And there's a behavioral sort of machine learning capability to that, and there's a predictive element coming to that as well. And the second piece from the AI that we're experimenting with right now is that a chatbot that helps you guide you through how you can save more. So we have our savings capability in Movin is called a stash. And I don't think I showed you this yesterday, but
No.
Given that this is radio, I'll have to describe it for the listeners. But with Movin, you have our core spending meter, which shows you how much you've spent so far this month. When I tap on it, I'm below my typical spending, so the whole app is green. If I was above typical spending, the whole app turns red, so it's a visual indication of your financial health immediately. But you'll see up the top, I've got spending versus savings as the two sort of primary, in conventional language, we call them tabs. And you hit on save, and then you see we categorize your savings into 3 time horizons. Your stash, which is your short-term savings, your investments, and your retirement plans, right? So it's short-term versus long-term savings. And within the stash, we're now building this chatbot capability, which will help you see how to increase your velocity of savings, what you can do to save for that holiday in Christmas, or for the new iPhone, or whatever that you're trying to do. And so there's a bunch of areas we're using, but it's all part of that mission. Ultimately, what we want Movin to be is your financial conscience sitting in your pocket, helping you save money more effectively on a day-to-day basis.
Obviously, you see a place for chatbots, or you're bullish on chatbots.
Until voice matures, yeah.
Yeah.
Because I think ultimately chatbots just evolve into voice.
Yeah. And is it kind of limited capability, chatbot meant to do a few specific things? Because in my experience with chatbots, so often it's painful, and it ends up being, Siri circa kind of 2012, 13,
Exactly.
and it just doesn't work the way it should.
No, so it is going to be, the chatbot we've built is very specifically towards your spending and savings behavior. And so you couldn't ask it, what's a good restaurant to go to for Chinese dinner tonight? It's not that sort of all-encompassing capability. Ultimately, we would probably build it into other platforms as well, like Messenger and so forth. But for now, it's contextual within the savings screen, the stash, and we'll pop up and say, do you want a tip on how to save more money? Right? And then it'll enable you to manipulate the settings in the app to achieve that, or to help you understand where your current behavior can be modified. So it's very specific around that. But again, there is an individualized and machine learning capability, that underpins that.
Some of the opening remarks yesterday I found to be particularly relevant. Lawrence Wintermeyer, the head of Innovate Finance, I think he yesterday actually published an article in City AM and maybe elsewhere as well, talking about Trump, populism, Brexit, and what the implications were looking forward, certainly for fintech, but even to an extent for society more broadly. Certainly the UK, as it relates to Brexit and the recent triggering of Article 50. It'd be interesting to get him on at some point and chat a bit further about his views there, because I think we are very much in an interesting moment in history, and we'll see where it takes us.
Absolutely. I think It was interesting to sort of see that this Brexit issue came up repeatedly in the event yesterday, and everyone's sort of holding their breath to wait to see what will happen. The sort of longer term futurist view of this is that borders are becoming less important, and we will soon have the technology to, at least in terms of the sort of banking that we're thinking about in the future, where KYC based on geography won't make a lot of sense in the future, or won't be necessarily a limiting factor. For example, conceivably, whether you're in the EU or not, a UK citizen in the near term or today can go and get a digital citizenship for Estonia, become a digital citizen of the EU, can use that digital citizenship conceivably to open a bank account in Estonia, not having an address or physical address there, which is a huge leap. But having said that, we already could do that with PayPal. We could do that with Venmo. We can do that with WePay or WeChat. We can, there's a lot of these different value store mechanisms we can do with Bitcoin. That sort of circumvent those old patterns. So I think increasingly we're going to see some interesting approaches to that sort of challenge those norms. But in terms of the Brexit thing, we were at dinner last night with the previous Lord Mayor, and he was talking about some of the statistics around fintech in London. And clearly London has been one of the leaders, if not the leader, by certain metrics in fintech globally, certainly in the number of jobs created in the space. So I guess the immediate fear would be, two immediate fears would be, will that be weakened by the Brexit? And secondly, it's very, very clear that the technology jobs that we need to keep powering fintech are not all going to be able to be provided by local Britons. And so without immigration and border policy allowing technology and skilled workers to come across the border from other parts of Europe, then ultimately this may limit London's ability to lead as a fintech centre. Now that really depends on how the transition and the negotiations as part of the exit from EU pan out. Maybe skilled workers will be still allowed to come into the UK under certain conditions, but there's a lot of uncertainty.
Yeah, I think that's absolutely right. I mean, London is without a doubt the fintech capital of the world, and certainly part of the reason that has been the case.
You're not biased by any chance in respect to London?
Not at all. Obviously, it's a confluence of things like the epicenter of financial services world in the UK, things like Euro clearing, FX. So, becomes
good standards, a good regulator that's progressive, good skills, capability. I think the only area potentially where London has been behind the US is actually the number of the amount of dollars invested. So
definitely,
capital,
definitely,
right? But,
and risk appetite.
Right. Yeah. There's that, but certainly London is a fierce competitor as a fintech capital, and has been since the early days.
Brett King, thank you very much for joining us today.
Will, it's always a pleasure, and we look forward to having you on Breaking Banks podcast in New York sometime soon to return the favor.
Look forward to it. Take care and enjoy London.
Thank you very much.
Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.